Welcome back, everybody. I'm Thomas, and we're diving into something pretty interesting today.
I'm Linda. And yeah, I think people might be surprised by how interesting American insurance can be.
Yeah, a lot of folks probably don't realize how big of a deal it is.
Right.
Yeah, it's actually the biggest insurance market in the whole world.
Trillions of dollars. Think bigger than the entire economy of Germany.
Really puts it in perspective, doesn't it?
It does.
So maybe we should start with the basics for anyone who isn't familiar with how insurance works.
Okay, so at its most basic, insurance is like a contract
Okay.
where one party, we call them the insurer, agrees to protect the other party,
Uh-huh.
the insured, from financial losses, and in exchange, the insured pays a fee. That's called the premium.
So like car insurance,
Exactly. You pay your premium to the insurance company, and if you get in an accident,
they cover the cost of repairs.
right, up to a certain limit, of course, which is all outlined in your policy.
It makes sense. So it's all about managing risk.
That's it. You're transferring the risk of a potentially huge financial burden to the insurance company.
So how did this all start? When did people decide we needed insurance?
It's a long history, but the need to protect yourself from financial loss, I mean, that's not new,
No, not at all.
right? Like, people have always been trying to find ways to avoid those big financial hits.
For sure, for sure.
The first insurance company in the U.S. was established all the way back in 1735 in Charleston, South Carolina.
Wow.
And back then, it was mainly focused on fire insurance.
Makes sense when you think about it. Most buildings were wood back then.
Exactly.
Okay.
Fire was a constant threat, so it makes sense that's where it all started.
But didn't one of the founding fathers have something to do with insurance too?
Ah, yes. Benjamin Franklin.
That guy. Always up to something.
Right. He was involved in everything, it seems. In 1752, he co-founded the Philadelphia Contribution Ship,
And that was,
an insurance company. It's actually still operating today, making it the oldest insurance carrier in the nation.
no kidding.
But that's not all. He was also really into fire prevention.
Oh yeah, he was big on that, wasn't he?
Huge. He saw preventing fires as being just as important as insuring against them.
Makes sense.
Right. So the Philadelphia Contribution Ship actually encouraged people to adopt fire safety measures. They even refused to insure buildings that were too risky.
Interesting. So it wasn't just about the money for him.
Absolutely. It was about keeping people safe, too.
So we've got this huge industry going back centuries, but who's in charge of it all? Who regulates all this activity?
That's where it gets a bit complicated, actually.
Oh,
Unlike other industries, insurance is mainly regulated at the state level.
really? So each state has its own rules.
Yeah, it's more like 50 different systems, all operating side by side.
Okay, so how did that happen? Wouldn't it be easier to just have one national system?
Well, it's a long story.
Okay.
In the early days, there wasn't much regulation at all.
The Wild West of insurance.
Kind of. It was mostly controlled through company charters, state laws, and court decisions.
So when did things start to change?
The mid-1800s. New Hampshire was the first state to appoint an insurance commissioner in 1851.
And then?
New York followed suit in 1859.
Oh.
And created a state department to oversee the insurance industry.
So those are the first big steps toward the system we have today.
Exactly. And from there, things kind of snowballed. As the insurance industry got bigger, more and more states started doing the same thing, creating their own regulatory frameworks.
But I bet not everyone was happy with this setup.
Oh, you're right. A lot of people argued that having all these different systems was cumbersome,
Uh-huh.
redundant,
Yeah.
confusing, and costly.
Okay, so did anyone try to get the federal government to take over and create a single system?
Oh, yeah. In 1944, there was a landmark Supreme Court case.
Okay.
It actually declared that insurance could be regulated by the federal government.
Under the Commerce Clause.
That's right, which basically gives Congress the power to regulate interstate commerce.
So did the feds jump in and take over?
Not so fast. The insurance industry and a lot of states pushed back hard against the idea.
So what happened?
Well, they argued that a one-size-fits-all federal approach wouldn't work.
I mean, they've got a point. Every state is different.
Right. They have their own unique characteristics and risks.
So did the federal government back down.
They did. In 1945, Congress passed the McCarran-Ferguson Act.
And that.
Basically said, nope, states still have the primary authority over insurance regulation.
Okay, so a win for the states' rights, folks.
It was, but the whole debate didn't just disappear. It kept coming back, especially after big events like financial crises.
Yeah, I bet those shake things up a bit.
They do. And even today, there are still discussions about the pros and cons of state versus federal regulation.
Oh, for sure. I've heard that debate myself.
Some people think we need more federal involvement, especially when it comes to consumer protection and systemic risk.
Right. That makes sense.
So Yeah, it's still an evolving landscape.
Definitely. Now, I know we have some listeners who are interested in not just the content itself, but also in learning how to talk about all this in American English.
Oh, absolutely.
We've already used some specific terms like insurer and premium.
Yeah, and there are plenty more. Understanding these terms is key to navigating the insurance world and speaking about it confidently.
So any other words or phrases our language learners should be listening for?
Oh, for sure. We'll break down some of those key terms as we go, using clear examples, so don't worry if some of this sounds a bit complicated right now.
Perfect. And I think it's important to remember that language learning is all about practice and exposure. So don't be afraid to look up those unfamiliar words.
Exactly. Take notes and try using them in conversation, even if you make mistakes.
Exactly. It's all part of the process.
And for our listeners trying to improve their American English, pay attention to how we use language here.
Right.
We'll be using idioms and phrases that are common in everyday American speech.
Those little nuances can make a big difference.
They do, so listen closely and see if you can pick up on them.
Now that we have a grasp on the history and regulation of American insurance, let's look at how these companies are structured.
Yeah, it's more complicated than you might think.
Okay, so what are we talking about here? What's the deal with insurance groups?
You see a lot of big insurance companies,
Yeah.
They aren't actually one single company.
What?
They're made up of multiple companies, often organized under a holding company.
Ah, like a company within a company.
Exactly.
Like those Russian nesting dolls.
That's a great way to put it. Like Geico, they're one of the biggest auto insurers.
Yeah, I know them.
Well, they actually have 9 different insurance subsidiaries.
Wow, so when you call Geico, you might be talking to any one of those 9 companies.
Yep. But for you as a consumer, it all feels like one big Geico, right?
That's the idea. So what's the point of all this? Why do they structure themselves this way?
Well, one of the biggest reasons is survivability.
Survivability.
If one of those subsidiaries has a tough year, maybe they get hit with a lot of claims,
Huh.
the other subsidiaries can keep things going and support the whole group.
Kind of like a safety net.
That's it. It makes the whole group more resilient, less likely to collapse if one part struggles.
Okay, that makes sense. It's like diversifying your investments, but on a corporate level.
Exactly. But of course, there are also challenges with this kind of structure,
I bet. Managing all those companies can't be easy.
especially in a highly regulated industry like insurance.
Yeah.
Lots of paperwork, legal stuff.
Oh, yeah.
If everyone's not on the same page, things can get messy quickly.
And I'm sure regulators are keeping a close eye on all this.
Absolutely. They're especially worried about something called systemic risk.
What's that?
Basically, it's the risk that if one company fails,
Uh-huh.
it could trigger a chain reaction that takes down the whole financial system.
Yikes, that sounds bad.
Yeah, it's like a domino effect.
Wow, okay.
So regulators want to make sure that if one company in a group fails, it doesn't bring down the entire system.
So it's a balancing act.
It is, between allowing companies to be efficient and making sure the whole system stays stable.
Okay, so let's shift gears a bit and talk about the different types of insurance these companies actually offer.
Okay.
I know there are tons of categories.
Right. But can you give us a general overview of the 2 main branches of insurance?
Absolutely. We have life and health insurance
Okay.
and property and casualty insurance, sometimes called P&C.
So life and health and P&C. Let's start with life and health. What does that cover?
As the name suggests, it covers risks related to our well-being and, mortality.
Right.
So health insurance helps pay for medical expenses.
Like doctor's visits, hospital stays.
Exactly. Things like prescription drugs and sometimes even dental and vision care.
Okay. So it's all about mitigating the financial burden of healthcare, which can be pretty hefty, especially here in the U.S.
Oh, absolutely. It can be incredibly expensive.
Right. And that's where health insurance comes in.
Right. It protects individuals and families from those potentially devastating costs.
Right. And what about life insurance? What does that do?
Life insurance is about providing financial protection for your loved ones
Okay.
in case of your death. It makes sure that your family will receive a payout.
So it's about providing for your family even when you're gone. Exactly. And that payout can help cover things like funeral costs, mortgage payments, or even your children's education.
Makes sense. So life and health insurance are about protecting our well-being both during life and after death.
That's a great way to put it.
So what about P&C insurance? What falls under that umbrella?
Property and casualty is all about protecting your possessions and yourself from risks and accidents.
Okay, so what kind of possessions are we talking about here?
Well, think about your home, your car,
Okay,
your belongings,
got it.
even things like boats or RVs.
Okay.
Property insurance protects you from losses due to damage or destruction from events like fires, storms, theft, or vandalism.
So if a tree falls on my house during a storm,
Your property insurance would help you cover the repairs.
that's good to know. So property insurance is about protecting the things we own.
Right.
What about the casualty part of P&C? What does that cover?
Casualty insurance covers your liability for accidents or negligence that cause harm to others or their property.
So like if I cause a car accident and injure someone
That's right. Your car insurance would cover their medical bills.
and any damage to their vehicle.
Exactly. It can even cover your legal fees if you get sued because of an accident.
Okay, so it's about managing those financial consequences, whether they're intentional or accidental.
It's about peace of mind knowing you're protected if something goes wrong.
Both life and health and property and casualty insurance are important for protecting us from various risks.
They are.
They provide financial security and peace of mind, knowing that we're not alone when those unexpected events happen.
Exactly.
It's all about shared risk and collective responsibility.
Well said.
Now, before we move on, let's take a closer look at some of the language we've been using.
Good idea.
For our listeners who are learning American English, what are some of the key terms and expressions they should pay attention to?
Well, the insurance world is full of specialized vocabulary, so understanding these terms is crucial for both navigating the industry and even just having conversations about it.
Right. Let's unpack the jargon.
Okay, let's start with a term we've used quite a bit already, the premium.
Okay.
Remember, that's the fee you pay to the insurer for coverage.
Right.
It's like a subscription fee for protection.
So premium is the price we pay for that peace of mind.
Right.
What about the person or company who holds the insurance policy? What do we call them?
That's the policy holder.
So the policyholder pays the premium and gets the benefits if something happens.
Exactly. Now let's move on to a word that might sound a bit intimidating, indemnification.
Okay, that one always trips me up.
It's a mouthful, but it's a pretty simple concept.
Okay.
It means the insurance company will compensate you for your losses, putting you back in the same financial position you were in before the event happened.
So if my house burns down and I have homeowner's insurance,
The insurance company would indemnify you by covering the cost of repairs.
making me whole again.
Exactly. Okay, another word we've used a lot today is regulation.
Right.
In the context of insurance, it means the rules and guidelines set by government agencies.
To make sure everything is fair.
Exactly. To make sure insurance companies operate fairly and responsibly.
So those regulations cover things like the financial stability of insurance companies and how they handle claims.
It's all about protecting consumers and making sure the whole industry is stable.
Makes sense.
We've also talked about admitted and surplus insurers.
Right.
An admitted insurer is a company that's officially licensed to operate in a particular state.
Okay.
They've met all the requirements and are authorized to sell insurance policies to residents of that state.
So they're kind of like the approved vendors.
Exactly. And because they're admitted, they have to follow all the state's rules and regulations.
Okay, what about surplus insurers?
Those are companies that haven't been licensed in a specific state but can still offer coverage under certain conditions.
So they can operate without a license. Why is that?
They typically handle unusual or hard-to-insure risks that admitted insurers might not want to cover.
Like what?
Think amusement parks, fireworks displays,
Okay.
even tattoo parlors.
Wow, that's quite a range.
These risks often end up on what are called export lists.
Export lists.
These lists outline risks that admitted insurers in a state generally won't cover.
So if you need insurance for something on the export list,
You need to find a surplus line insurer.
so they're the specialists for those high-risk situations.
You got it. They fill a gap in the market by covering things traditional insurers might shy away from.
Makes sense. Now, we also briefly mentioned insurance groups earlier.
Yes.
Can you refresh our memory on those?
Insurance groups are basically collections of insurance companies that all operate under a common ownership structure.
Usually a holding company.
Right.
Like Jayeco with its 9 subsidiaries.
Exactly. And these groups can be quite large with companies in multiple states or even internationally.
Right. And we talked about how these groups offer advantages like increased survivability and risk diversification.
Right.
But what are some of the challenges of managing such a complex structure?
One of the biggest is maintaining something called corporate formalities.
Corporate formalities. What's that?
Basically, it means each company in the group has to follow certain legal requirements to maintain its own separate legal identity.
Like what?
Things like having separate board meetings, keeping accurate financial records, not mixing funds between companies.
So even though they're part of the same group, each company needs to operate independently.
Exactly. If they don't, it could cause legal problems later on.
So, like, if one subsidiary goes bankrupt?
Creditors might try to go after the assets of the other companies in the group
I see.
if those formalities weren't followed.
Okay, so it's about protecting the whole group by making sure each company is acting responsibly.
That's a great way to put it.
So we've covered a lot. The basics of insurance, how it's structured, the regulations.
It's a big world.
It is. And for those listening who are trying to improve their American English, what are some key things they should be taking away from all this?
Well, we've used some specific terms and expressions that might be new to those unfamiliar with the insurance world or even just American English in general.
Right, so let's break those down a bit more.
Okay. Let's start with risk assessment.
Okay.
That's a key concept in insurance and refers to analyzing the likelihood and potential impact of something bad happening.
So like calculating the odds and determining the potential cost of a certain risk.
Exactly. That's how insurance companies decide how much to charge for premiums and what kind of coverage to offer.
Makes sense. What about underwriting?
Underwriting is the process of evaluating an application for insurance
Okay.
and deciding whether to accept or reject the risk.
So underwriters are the ones who decide whether to insure you and how much to charge you?
Exactly. Now let's move on to some more casual expressions.
Okay.
We talked about playing it safe when discussing levels of coverage. That means choosing a higher level of coverage to minimize your potential risk.
So being cautious even if it costs a bit more.
Right. And on the other hand, we might say he's got his bases covered to describe someone who is well protected.
Like they've done their homework and are ready for anything.
Exactly. Understanding these types of idioms can really make your American English sound more natural.
For sure. Now, any other tips for our listeners who are learning English?
Remember, language learning is all about practice and exposure.
Right.
Don't be afraid to immerse yourself in the language, watch movies, listen to podcasts.
Read.
Yes, and pay attention to how native speakers talk, especially in casual conversation.
And don't be afraid to make mistakes.
It's all part of the learning process.
The more you practice, the more confident you'll become.
Exactly.
Well said. Now that we've unpacked some of the language of insurance, let's move on to the next part of our dive.
Okay.
We'll be exploring the fascinating world of state regulation and the ongoing debate over federal involvement in the insurance industry.
It's a hot topic.
Stay tuned.
So, yeah, it's a hot topic for sure.
Yeah, where do things stand now? Is it still a battleground?
Oh, definitely, especially after those big financial crises we've seen.
Yeah, like back in 2008.
Exactly. That really put systemic risk on everyone's radar.
Right, the idea that one big company failing could bring down the whole system.
It made people wonder if state-based regulation was really enough.
So did that lead to any big changes in how insurance is regulated?
It did. One of the outcomes was the Dodd-Frank Act in 2010.
Dodd-Frank, that was a big one.
It had a huge impact on the entire financial industry, really.
And it included some insurance-specific stuff too, right?
It did. One of the most important changes was the creation of the Federal Insurance Office.
The FIO.
Yep, it's part of the Treasury Department.
Okay.
And it's basically tasked with keeping an eye on the insurance industry.
So like a watchdog.
Kind of. They monitor the industry, look for gaps in state regulation, and work with international regulators.
So the federal government is dipping its toes in, but not taking full control.
That's a good way to put it. The FIO can't directly regulate most companies,
Okay.
but they can make recommendations to Congress or to the states.
So more of an advisory role, but still pretty significant.
Right. And Dodd-Frank also created the Financial Stability Oversight Council.
The FSOs,
Yeah, it's made up of leaders from all the different financial regulatory agencies.
the big guns of regulation.
Exactly. Their job is to identify and respond to threats to the whole financial system.
And this affects the insurance industry how?
Well, the FSOC has the power to designate certain companies as systemically important financial institutions.
Sci-fis?
What are those?
The too big to fail companies. If one of them goes down, the whole system could be at risk.
And that includes insurance companies.
It does. And if an insurance company is labeled a sci-fi, they face much stricter federal oversight.
So it's a way for the federal government to step in and take more control when needed.
Exactly. It gives them more power to regulate certain parts of the industry.
So those lines between state and federal regulation are getting a little blurry.
They are. And it's a trend that's likely to continue, especially as the insurance industry gets more globalized.
Makes sense. So this whole debate about how to regulate insurance is really about balancing different interests, right? Right on one side, you have the consumers who want to be protected from unfair practices and make sure they get what they paid for.
And on the other side,
The insurance industry itself.
who want to?
They want to be able to operate with some freedom and flexibility. They argue too much regulation stifles innovation and drives up costs for everyone.
So it's a delicate balance.
It is. You have to find that sweet spot where consumers are protected, but the industry can still function.
And it gets even more complicated because the insurance industry is so diverse.
Right. You've got small local insurers and huge multinational corporations.
And they all have different needs and challenges.
Exactly. So this debate about the best way to regulate insurance isn't going away anytime soon.
Nope. Well, it's definitely given us a lot to think about.
It has.
Before we move on, any other key terms our listeners should be paying attention to?
Oh, yeah, for sure. We've been throwing around some pretty technical language, so let's break down a few more of those terms.
Perfect. Let's demystify the jargon some more.
Okay, so we talked about the Commerce Clause earlier. It's the part of the Constitution that gives Congress the power to regulate commerce between states.
Right.
And it's been a big deal in the debate over insurance regulation.
Because it could give the federal government a way to take over if they think the states aren't doing a good enough job.
Exactly. Now, another term we've been using is systemic risk.
Right.
That's the possibility that one company failing could trigger a chain reaction that takes down the whole system.
The domino effect.
Right. And it's a growing concern as the financial world gets more interconnected.
So regulators are trying to get ahead of that.
Exactly. They're working to identify and mitigate systemic risk, especially in industries like insurance, which are so crucial to the whole financial system.
Okay, so Commerce Clause and systemic risk are two important ones.
Definitely.
Any others?
We also talked about corporate formalities.
Mm-hmm.
Remember, those are the legal requirements that companies within an insurance group have to follow.
To keep their separate legal identity.
Exactly. Things like separate board meetings, separate financial records.
Right.
It's all about making sure each company in the group is operating independently, even though they have the same owner.
And if they don't?
It could lead to some serious legal and financial issues.
Okay, so corporate formalities, another important one to remember.
Yes.
Any other tips for our listeners who are working on their American English?
Always pay attention to the context.
Okay.
The same word can have different meanings depending on the situation.
Sure.
And understanding those subtle differences will help you understand the language on a deeper level.
That's great advice. Context is everything.
It really is. And don't be afraid to ask questions if you're not sure about something.
Most people are happy to help.
They are. Language learning is a journey, so just focus on making progress.
Well said. Now that we've tackled the complexities of regulation, let's shift our focus to something that affects us all directly.
Okay.
Different types of insurance policies and how to choose the right coverage.
That's a big one.
It can be overwhelming, but we'll break it down and give you some practical tips.
We'll help you navigate the world of insurance with confidence.
Sounds good. So when it comes to insurance, one of the most common questions is,
What kind do I actually need?
yeah, with so many options out there, it can be tough to figure that out.
It can, but there's a basic framework that can help.
Okay.
We can think of it like a pyramid with the most essential types at the bottom.
The foundation of the pyramid.
Exactly. And the more specific types build on top.
Okay, so what are the essential ones? What's the base of the pyramid?
Health insurance, auto insurance, and homeowners or renters insurance.
Okay, so those are the big three.
They cover the most common and potentially devastating risks most people face.
Let's start with health insurance. Why is that so important?
Healthcare costs in the U.S. are just really high.
Yeah, we all know that.
Even a minor illness or injury can lead to thousands of dollars in bills.
And without insurance, those costs can be crippling.
Exactly. It's not just about protecting your health, it's about protecting your finances too.
So health insurance is a must-have. What about auto insurance?
Auto insurance is crucial because accidents can happen to anyone no matter how careful you are.
And the costs can add up quickly.
Repair costs, medical bills, legal fees.
It's a lot.
Without auto insurance, you could be personally liable for all of that.
And it's required by law in most states,
It
right?
is. Most states have mandatory liability insurance laws.
Okay, so auto insurance is both a legal requirement and a financial necessity.
Mm.
What about homeowners or renters insurance?
Whether you own your home or rent your dwelling and its contents are a big investment.
Right.
And it's important to have insurance to protect those assets from things like fire, theft, vandalism, or natural disasters.
So if my house burns down or gets robbed.
Your homeowners or renters insurance would help cover the cost of repairs or replacing your belongings.
So it's about peace of mind knowing you're covered if something happens.
Exactly.
Okay, so we've got the big three: health, auto, and homeowners or renters.
Those are the essentials.
What are those other layers of the pyramid? What else might people consider?
As you move up, you get into more specialized types of insurance.
Okay.
For example, disability insurance.
What does that cover?
It provides income replacement if you can't work because of an illness or injury.
So it's like a safety net for your income.
Exactly. It protects your financial well-being if something unexpected happens.
That's important. What other types of insurance fall into that category?
Well, life insurance is another one.
We talked about that a bit earlier.
Right. But it's worth repeating.
Yeah.
It provides financial security for your loved ones if you die.
Like funeral costs, mortgage payments.
Exactly. And how much you need depends on things like your age, your health, how much you make, and how many dependents you have.
Makes sense. So those are just a few examples of those more specialized types of insurance.
Right.
And there are plenty of others out there to cover all sorts of situations.
Definitely. Like umbrella insurance.
There's that.
It provides extra liability coverage on top of what's already in your auto or homeowner's insurance.
So like an extra layer of protection for big liability claims.
That's it. It can give you peace of mind if you're worried about lawsuits or other things that could lead to big financial losses.
Okay, so the key takeaway here is that there's no one-size-fits-all approach.
Right.
What kind of insurance you need depends on your situation, your risk tolerance, and your financial goals.
You really need to assess your own needs, do your research, and talk to a qualified professional to figure out the right coverage for you.
Well said. Now, before we wrap up this segment, let's go back to the language of insurance.
Okay.
Any more key terms our language learners should be listening for?
For sure. We've covered a lot of ground here, so let's unpack a few more of those technical terms.
All right, let's get back into that insurance lingo.
Okay, let's start with liability.
Okay.
It refers to your legal responsibility for something like causing harm to someone or their property.
Right.
And liability insurance protects you financially if you're found responsible for those damages.
So if I back into someone's car in a parking lot,
Your liability insurance would help cover the cost of repairs to their car and any medical expenses if they were hurt.
okay, so liability is all about responsibility and financial protection in case you cause harm.
Exactly. Now, another important term is deductible.
Okay.
That's the amount you have to pay out of pocket before your insurance kicks in.
So if I have a $500 deductible on my car insurance,
And you get into an accident that causes $2,000 worth of damage.
I would have to pay the first $500 and my insurance would cover the rest.
Exactly. Deductibles help insurance companies share the risk with policyholders, and it discourages people from making small claims.
Okay, so deductible, the amount you pay first. What about coverage limits?
Those are the maximum amounts that your insurance will pay for a covered loss.
Okay.
Your auto insurance might have a $100,000 bodily injury liability limit per person
Okay.
and a $300,000 limit per accident. So if you cause an accident and one person is injured, your insurance will pay up to $100,000 for their medical bills.
But if multiple people are injured, the total payout is capped at $300,000.
Exactly. Coverage limits define how much protection your policy offers.
So it's important to choose limits that fit your needs and your risk tolerance.
You want to be sure you have enough coverage if something major happens.
For sure. Any other tips for our language learners out there?
Pay attention to how these terms are used in context.
Okay.
Sometimes the same word can have different meanings depending on the type of policy or the specific situation.
Right. Context is key.
It is. And remember, don't be afraid to ask if you're not sure what something means.
People are usually happy to help.
They are. Now that we've covered types of insurance and some more vocabulary, let's move on to something that can be a bit confusing. The claims process.
Yeah, nobody really enjoys filing an insurance claim.
It can be stressful.
You're dealing with a tough situation like an accident or a fire,
And then you have to navigate all this paperwork and procedures.
but understanding the basics can make it a little less overwhelming.
Exactly. So let's break it down step by step.
All right, let's demystify the insurance claims process.
So let's break it down step by step.
All right, let's demystify the insurance claims process
The first thing you need to do is report the claim to your insurance company.
as soon as possible after the incident.
Right. You can usually do this by phone or online.
Okay,
You'll need to give them some basic information about what happened.
like the date, time, location, and a description of the incident.
Exactly.
So the sooner you report it, the better.
Definitely. It lets them start investigating right away and get the ball rolling on getting you the compensation you deserve.
Okay, so reporting the claim is step one. What happens next?
Your insurance company will assign an adjuster to your case.
An adjuster.
Their job is to investigate the claim, assess the damages, and decide if your policy actually covers the loss.
So they're like an investigator for the insurance company.
That's a good way to think about it.
Okay.
They'll gather information, review your policy, maybe even interview witnesses.
To figure out what happened and how much the damages are.
Exactly.
So once the adjuster is done investigating.
They'll make a decision about your claim.
Okay.
If it's approved, they'll figure out how much compensation you're entitled to.
Based on your coverage limits, your deductible, and all that stuff.
Right. So the adjuster's decision determines whether you get paid and how much.
So let's say they approve my claim. How do I actually get the money?
They'll usually send you a payment directly, or sometimes they'll pay the repair shop or service provider.
Okay.
That payment will cover the cost of repairs or whatever other expenses you had up to the limits of your policy.
So I don't have to chase them down for the money.
Nope, they handle all that.
Okay, but what if they deny my claim? What can I do then?
You can appeal the decision. Just contact your insurance company and explain why you think they should approve it.
Okay.
You might need to provide more documentation or evidence to support your case.
So it's not game over if they initially deny my claim.
Not at all.
Okay, that's good to know. Any tips for our listeners on how to make this whole claims process smoother?
Absolutely. First, document everything. Take photos and videos of the damage, keep all your receipts, and keep a record of all your conversations with the insurance company.
So create a paper trail.
Exactly. Having good documentation can really help support your claim and make sure you get a fair settlement.
Okay, document everything. What else?
Be proactive. Don't wait for them to contact you. Reach out to them as soon as possible after the incident happens.
Okay.
And follow up with them regularly to see how things are going.
Stay on top of it.
The more engaged you are, the better the outcome is likely to be.
Good advice. Anything else?
Understand your policy. Read through it carefully so you know what's covered, what's not, and what your deductible is.
Right. Know your rights and responsibilities.
Exactly. And lastly, don't be afraid to get professional help if you need it.
Okay.
If you're struggling with the process or you think your claim was denied unfairly, there are people who can help you.
Like an insurance attorney.
Right, or a public adjuster.
Okay.
They can help you get the compensation you deserve.
So those are the key tips. Document everything. Be proactive. Understand your policy. And don't be afraid to get help if you need it.
Those are the big ones.
Great advice. Now, before we wrap up our deep dive into the world of American insurance, I want to thank you, Linda, for sharing your expertise with us.
It's been my pleasure. I hope this has been helpful for everyone.
It has. And for our listeners who are using this to improve their American English, keep practicing, keep exploring the language, and don't be afraid to make mistakes.
Exactly. And remember, the world of insurance is full of interesting vocabulary, so keep learning, keep asking questions.
Well said. Now, we'd love to hear from you, our listeners. What were your biggest takeaways from this deep dive? Do you have any questions about insurance? Head over to the comment section on our YouTube channel and let us know.
And while you're there, don't forget to subscribe to our channel for more deep dives into all sorts of fascinating topics.
We explore everything from history and science to culture and language, so there's something for everyone.
And make sure to hit that notification bell so you don't miss an episode.
We release new deep dives every week.
This is Thomas and Linda.
Signing off for now.
Stay curious, everyone.